If you're thinking about trading in your motorcycle this year, stop right now, because it might just be one of the worst financial decisions you could make. The motorcycle market in 2025 is in complete disarray, and riders who are looking to trade in their bikes are finding themselves stuck in a system that's stacked against them. From plummeting trade-in values to an oversupply of new bikes flooding the market, the current state of the motorcycle industry is making it nearly impossible to get a fair deal. Dealerships are overwhelmed with unsold inventory, used bike values have dropped dramatically, and negative equity is trapping riders in their current loans. Meanwhile, the cost of living continues to rise, and astronomical interest rates are making financing new motorcycles less appealing. Add all this together, and it's clear that trading in your bike this year is simply not worth it. In this deep dive, we'll break down what's happening in the motorcycle market, why trade-in values are hitting rock bottom, and what you can do instead to protect your wallet and make smarter decisions. The oversaturated market. Too many bikes, not enough buyers. The core issue facing the motorcycle market in 2025 is oversaturation. Manufacturers like Honda, Yamaha, Kawasaki, and Harley-Davidson ramped up production during the post-pandemic years, expecting demand to skyrocket. But that demand has not materialized. As a result, dealerships across the country are sitting on an overwhelming amount of unsold inventory. In fact, there are now 25% more new motorcycles available than there were just 2 years ago. That's hundreds of thousands of bikes collecting dust on showroom floors, and the problem is only getting worse. This glut of new motorcycles isn't limited to niche models, it's affecting every category. Beginner-friendly bikes like the Yamaha R3 and Kawasaki Ninja 400 are piling up in dealerships. Mid-tier machines like the Yamaha MT-07 and Suzuki SV650 are struggling to find buyers. Even premium models like the Honda Goldwing and Suzuki Hayabusa, which have long been icons of the industry, are sitting unsold in record numbers. To move this inventory, dealerships are offering massive discounts and incentives. It's not uncommon to see $2,000 to $5,000 slashed off the MSRP of popular models, or even 0% financing offers on select bikes. While these deals might sound tempting if you're shopping for a new motorcycle, they're devastating for anyone trying to sell or trade in a used bike. Why would someone buy a used motorcycle for close to MSRP when they can get a brand new one for just a little more? Trade-in values are hitting rock bottom. The oversupply of new bikes has created a domino effect that's crushing the value of used motorcycles. Over the past 2 years, trade-in values have dropped by an average of 25–30%. That means your motorcycle is worth significantly less today than it was just a couple of years ago. And dealerships aren't exactly eager to take it off your hands. Take the Yamaha MT-09, for example. A 2020 model that could fetch $9,000 in trade-in value just 2 years ago might now only be worth $6,000 to $500 or less. Similarly, a 2018 Honda Africa Twin that once had a trade-in value of $10,000 might now only bring in $7,500 at best. And it's not just sport bikes and adventure bikes. Cruisers, scooters, and even touring bikes are all taking a massive hit. Why are trade-in values dropping so sharply? It's simple. Dealerships don't want to take on more inventory they can't sell. With so many new motorcycles sitting unsold, the market for used bikes has all but dried up. Dealers are lowballing trade-in offers because they know they'll struggle to resell your bike at a profit. Negative equity, the silent trap keeping riders stuck. If falling trade-in values weren't bad enough, Many riders are also dealing with the problem of negative equity. Right now, the average motorcycle owner with a loan owes about $4,200 more than their bike is worth. That means if you trade in your bike, you're not just losing money, you're actually digging yourself deeper into debt. This issue traces back to the pandemic years, when motorcycle prices skyrocketed due to supply chain issues and inflated demand. Riders were paying well over MSRP for bikes and taking out loans with high interest rates just to get their hands on one. Fast forward to 2025, and those same bikes are now worth far less, leaving many owners upside down on their loans. For example, let's say you bought a Yamaha R7 during the pandemic for $10,000. Today, that bike might only be worth $7,500 as a trade-in. But if you still owe $9,000 on your loan, you're stuck with $1,500 in negative equity. Trading in that bike would mean rolling that debt into a new loan, creating a cycle that's almost impossible to escape. Dealer desperation. Tactics you need to watch out for. Dealerships are feeling the pressure too. With unsold inventory piling up, they're using every trick in the book to move bikes off their lots. But while some of these tactics might sound appealing, they're not always in your best interest. One common tactic is offering massive discounts on new bikes. Models like the Kawasaki Ninja ZX6R, Suzuki V-Strom 650, and even the Honda Rebel 1100 are being sold at discounts of $3,000 to $5,000. Some dealerships are even offering 0% APR for up to 48 months, which might seem like a great deal on paper. Another tactic is adding aftermarket parts like custom exhausts, LED lights, and crash bars, and jacking up the price by $2,000 to $5,000. While these add-ons might make the bike look more appealing, they rarely add real value, and banks often won't consider them when approving loans. And then there's the issue of lowball trade-in offers. Dealerships know they're in the driver's seat when it comes to trade-ins, and they're not afraid to take advantage of riders who are desperate to upgrade. Riders are keeping their bikes longer. With trade-in values tanking and new bikes still out of reach for many, more riders are choosing to hold on to their motorcycles longer than ever before. On average, riders are now keeping their bikes for 7 to 10 years, compared to just 3 to 5 years a decade ago. This shift is being driven by several factors. First, many riders are choosing to invest in maintenance rather than upgrading to a new bike. Regular servicing, repairs, and aftermarket upgrades can keep an older bike running smoothly for years, often at a fraction of the cost of buying new. Second, economic uncertainty is making riders think twice about taking on new loans. With the cost of living rising and wages stagnating, fewer people are willing to commit to the high monthly payments that come with financing a new motorcycle. Finally, high interest rates are discouraging riders from financing new bikes. The national average for a used motorcycle loan is now 11% APR, making it more expensive than ever to borrow money for a bike. What should you do instead? If you're a rider navigating the chaotic motorcycle market in 2025, the key to making smart decisions lies in understanding the situation and planning accordingly. Trading in your bike might seem like the logical next step if you're eyeing an upgrade, but the harsh reality of today's market means that you're more likely to lose money than gain anything meaningful. Here's a deeper dive into what you should do instead to ensure you protect your investment and avoid unnecessary financial strain. 1. Hold onto your bike if you can. If your current motorcycle is still running well and meeting your needs, the smartest move right now is to keep it. Don't let the allure of a new model tempt you into making a trade-in that could leave you worse off. Motorcycles are inherently depreciating assets, but their value holds up much better when you maintain them properly. Regular maintenance, like oil changes, tire replacements, brake checks, and chain adjustments, can add years of life to your bike. It's much cheaper to invest in routine servicing than to commit to a new loan or trade-in deal that leaves you with negative equity. For example, spending $500 annually on maintenance is a far better alternative to taking on an $8,000 or $10,000 loan for a new motorcycle, especially when interest rates for used bikes are hovering around 11%. If your bike is reliable, comfortable, and still brings you joy on the road, there's no urgent need to trade it in. Many riders are now keeping their motorcycles for 7 to 10 years instead of upgrading every 3 to 5 years like they used to, and this trend makes financial sense in today's market. Holding on to your bike not only saves you from unnecessary financial stress, but also allows you to wait for the market to stabilize. You'll have more options and a stronger bargaining position when trade-in values and resale prices eventually improve. 2. Avoid trading. If you're underwater on your loan, one of the biggest traps riders are falling into right now is negative equity. If you owe more on your motorcycle loan than your bike is currently worth, trading it in will only dig you into a deeper financial hole. This happens because the difference between what you owe and what your bike is worth, the negative equity, gets rolled into your next loan, increasing your debt burden. For example, let's say you owe $10,000 on a bike that's now only worth $7,000. If you trade it in, that $3,000 in negative equity doesn't just disappear. It gets added to your new loan. So if the new bike you're purchasing costs $10,000, you're actually financing $13,000. This means higher monthly payments, more interest, and a longer time stuck paying off a loan for a bike that may also depreciate quickly. Instead of trading in, consider selling your bike privately. Private sales often yield higher returns than trade-ins because you're not dealing with a dealership that's trying to profit from your transaction. While the market for used motorcycles is challenging right now, it's still possible to find buyers who are willing to pay more than a dealership's lowball trade-in offer. If selling privately isn't an option and you're stuck with negative equity, it's better to focus on paying down your loan as quickly as possible rather than rolling it into a new one. 3. If you need a new bike, shop smart. There are always situations where a new bike might be a necessity rather than a luxury. Maybe your current motorcycle has reached the end of its lifespan, or your needs have changed and your current bike just isn't cutting it anymore. If you absolutely need a new bike, be a smart shopper and take advantage of the deals and incentives currently available. But proceed with caution. Many dealerships are offering significant discounts on new bikes to clear out their overstocked inventory. Popular models like the Yamaha R7, Kawasaki Z650, and Honda Rebel 1100 are being sold at $2,000 to $5,000 off MSRP. Some brands are even offering 0% APR financing or low interest rates for up to 48 months. While these deals might seem too good to pass up, make sure you're not falling for dealer tricks.